Good morning. Welcome to the Milk Road Show, the daily crypto show that RSVP'd yes to the White House Crypto Summit, but somehow still didn't make the list. I'm your host, Jay Hamilton. It's Friday, March 7th. Last night, Trump signed an executive order for a Bitcoin strategic reserve and a digital asset stockpile. What's the difference? Why didn't the markets pump? What is going on? We got the big news and nothing happened. We actually kind of dumped a bit. We're going to talk about that. Also, what if your bank account was on chain, giving you better yields than a savings account, and you didn't even know you were using crypto? Well, that is just around the corner. Also, what if the entire global economy moved on chain? I'm talking stocks, bonds, real estate, all assets, all currencies. We're talking hundreds of trillions of dollars in global assets. What if they were all tokenized and programmable? Kind of sounds wild, but it's already starting. And the question is, how fast will it happen? We're going to break down RWAs. We're going to talk about what's going on in DeFi and so much more. Today, we're joined by Mason Nystrom, junior partner for Pantera Capital, leading crypto investment firm. He's also previously worked at Masari, Consensus, and Variant Fund. This guy's been around the block. Before we jump in, if you guys want to hang out with me on a daily basis, join our Telegram group. Hit the link in the show notes. Today's episode is brought to you by Definitive, advanced trading on every chain. It's also brought to you by Coinshift, powering top crypto treasuries with their yield-bearing stablecoin CSUSDL. You'll hear more about both of them later in the show. Without further ado, Mason, welcome to the Milk Road Show.
Yeah, Jay. How we doing?
Doing great, man. I mean, big news last night. Maybe it wasn't big news because we all knew it was coming. It was like Trump has been teasing the strategic Bitcoin reserve so much, but he actually announced it, and he announced it before the crypto White House summit, which was kind of interesting to do it the day before. We all thought he would do it today, but let's jump into what he announced and what this means and why markets aren't pumping. I think is probably everybody's main question. I'll go to you first on your takes on what he announced yesterday.
Yeah, let's jump into it. So, David Sachs, announced last night that the executive order was signed. Basically, did two things. One, it created a Bitcoin strategic reserve that will hold the existing Bitcoins that the government has in custody, and also potentially gives a way for the government to increase their Bitcoin allocation. And then the second thing that they announced was a digital asset stockpile, which will basically, hold the other digital assets that the government, has. They didn't give much more information in terms of what would happen with those assets, but it looks like for the time being that they'll at least be holding on to them.
Yeah, and so basically the strategic Bitcoin reserve is going to hold the just essentially all Trump could really do through an executive order was say, don't sell the existing assets that we have. He can't, through an executive order, say, oh, go buy more Bitcoin. He needs more congressional approval in order to achieve that. But he does say, this is the interesting thing. He does say in the executive order, where's the line? Let me find it here, that the secretaries of Treasury and Commerce are authorized to develop budget neutral strategies for acquiring additional Bitcoin, provided these strategies have no incremental costs on taxpayers. And this is great. The first retweet is Michael Saylor saying, I have a few budget neutral strategies for acquiring additional Bitcoin.
I love it. Yeah. I mean, I think that there's a few ways you could like take the, strategic reserve. Like maybe we could just like steel man the bull case and like the bear case really quick. I think if like you look at the strategic reserve, like what is Bitcoin? It's a store of value asset. And, the ultimate honor for any store of value asset is to be held by the US government. And so I think if you look at like the bull case, this kind of just gives the green light for every other nation to potentially look at a similar strategic reserve for Bitcoin, potentially, buy Bitcoin into that strategic reserve. And I always like come back to that saying of like, first, like they ignore you, then they laugh at you, then they fight you, then you win. This is kind of like Bitcoin winning right here because, it's a store of value asset. Now it has like the highest honor of being held by the US government. And then if we take like the steelman on the bear case, this was kind of priced in. Polymarket, I think, had the odds of like, at least like 65% of this happening, becomes more of like a marketing stunt than it actually does. Like the government doesn't end up buying any new coins. and just like holds what they have, which, might not move the needle in terms of like marginal, buying power for Bitcoin, at least from the US context. What I do like about the delineation between the reserve as well as the stockpile is it removes some of the politicalization from what assets should be included, and potentially gives us, a longer time frame to think about it from a fundamentals approach, at least from the stockpile.
Mm-hmm. Yeah, I think that I want to ask you next about why markets aren't moving. But before I do, I think that what we are seeing right now is, as you said, it's solidifying the place of Bitcoin as a reserve asset. And it is also saying that there's other assets that the US values. And so therefore they want to hold a stockpile. But it is not them saying, hey, we're going to go out and buy a whole bunch of this tomorrow. That is not what is happening here. So why markets not reacting? What's going on in the markets? What are your thoughts there?
Yeah, I mean, I think that we're clearly at a time in the markets where there's still a lot of uncertainty. And so, even when you see like some type of news that you would imagine to be like very bullish or move the market, ends up not, in part because I think the strategic reserve, like as I mentioned, seemed relatively priced in, at least, based on like poly market odds. And so I think because you have this like consensus of the broader uncertainty in the market, that it leads, to less movement on, whether it's like positive news. And I think we've seen even like a variety of other announcements this week that I would consider like relatively positive, that have kept the markets, more flat.
Massively positive, right? Like it's like what is good news? Good news again. We've got just endless. Texas is not quite there, but they've got a proposal to actually buy Bitcoin, 500 million a year. Now they're not quite there yet. It's not passed in the legislation yet, but they're getting closer. And Utah's getting closer. We had Congress vote to repeal the DeFi killer, which was going to basically require anybody in the US to KYC in order to use a DeFi app. Now that hadn't come into effect yet, but they repealed it before it did. Like all this stuff, it's like one thing after another. We put out an article in the newsletter, and the list of bullish news was so long, and markets are just continuing to struggle. Like, it's just all macro? Like macro is that your thought? Is like macro is just in such a tough position right now, and a lot of that pressure is the political uncertainty from Trump, tariffs, Doge is also creating a lot of uncertainty, and the US economy is slowing down right now. Now, it doesn't mean it's going to do that forever, but right now it certainly is going in that direction.
Yeah, I mean, I think that largely is correct. Like we're at the point in crypto where the asset classes matured to a larger extent, and even though it's still nascent, it's matured to the place where it's a little more correlated to macro. And so I think it is, at least in the near to midterm, going to track the more macro environment. And we see that in the venture capital markets as well, and not just the liquid token markets.
If you're only trading on centralized exchanges, then you're not going to make it. The best traders know the alpha is on-chain. Definitive, founded by Coinbase alums, lets you trade any token on Solana, Base, or any chain all in one platform. What makes Definitive different is its advanced order types. You can execute limit, TWAP, and stop loss completely on-chain. Plus, you get the best prices as your order is routed instantly through every DEX and liquidity pool, getting you up to 19 times lower fees. Trusted by funds, whales, and the milkman himself, now you too can trade like a pro. Milk Road listeners get a tasty glass of milk with zero fees on your first 25,000 at milkroad.definitive.fi. Meet CSUSDL, the stablecoin built for institutions and DAOs. Don't just hold basic stablecoins, earn yield, all without compromising security. Backed by regulated real-world assets and secured with institutional-grade risk management by our friends at Stakehouse Financial, put your treasury cash to work, earning native yield and protocol rewards. Built by the team behind Coinshift, which is trusted to manage over $1 billion in business treasuries on-chain, including Aave, Gitcoin, and hundreds of leading institutions, CYCSUSDL is gaining traction at milkroad.com/Coinshift. Yeah, completely. When What are you seeing in the, let me just double click on that. What are you seeing in the venture capital markets in terms of flows right now?
Yeah, so I would say there's a few things happening kind of in the state of crypto VC. The first is that valuations have kind of risen over the past several months. And so, what that ends up resulting in is a lot of venture capitalists kind of sit on their hands rather than deploy capital, just because the valuations are less attractive. I think as a result, we've seen the pre-seed and seed markets slow to a greater extent over the past several months. We have seen a little more of a bid at the Series A and Series B compared to what we were seeing 6 months ago, and I think in part of this is just like as a reversion to fundamentals. And so if you think about the state of the market, we've kind of gotten to the point in the cycle where narrative matters less and people once again are valuing fundamentals, and so that causes people to really correct to an extent and look for companies that are generating revenue, generating fees, and have quite sustainable business models. And I'd say the last kind of quick thing happening in the venture capital landscape is a lot of funds started deploying around 2022, and so a typical VC deployment cycle is anywhere from 3 to 4 years. You have a lot of funds now coming to the tail end of that deployment cycle. And so that means either they're writing fewer checks or they're going back out to market to fundraise. And so that also slows some of the investment process.
Do you think that there will be a pickup coming? Is like, how do you, if you were to project out the rest of this year in terms of the VC and the investment flows at that level, where do you think it goes?
Yeah, I would say that broadly, the venture markets are lagging the public markets. And so when the public market corrects, valuations in the private markets stay a little bit higher and don't correct as instantly. And so I think that the slower pace of deployment, and this is more anecdotal. I'd have to actually look at the data to see if this is actually happening, but will probably continue over at least the near term as the market stays like relatively uncertain. And then I imagine once more certainty in the market is there and people are more excited, then we'll start to see an increase in deployment as valuations come down. That increases capital deployment, and then also as more funds raise their new funds and announce new funds, that will also catalyze more investment from the private side.
Mm-hmm. Mm-hmm. Okay, let's shift gears slightly to, you mentioned there's a move from pumpamentals to fundamentals, which I think is a much welcome move in the space. A little bit less degeneracy and a little bit more stable decision making happening. And we've talked a lot about how we believe DeFi to be one of the best sectors to invest in this cycle. And it seems like that moment might be coming. And you wrote a great article recently where you broke down 3 trends that you're seeing around the creation of consumer grade crypto apps that are some are already here, but more are coming. The next phase of RWAs, and I just hate the term RWAs, but like just it's like the only term to bucket every global asset in the world and put it into a term, and that's RWAs. And what you're seeing on RWAs is an opportunity for new capital to come into crypto, which we desperately need. So we're going to talk about that. And then finally, also the new stack that's happening around the evolution of DeFi protocols becoming platforms. And we want to break that down as well. So let's jump into these 3 trends. First, on the consumer DeFi side, what are you seeing there?
Yeah, so the first trend in DeFi that I'm seeing is the rise of more consumer grade DeFi applications. And if you think back over like what's changed over the past 18 months to kind of enable this like consumer DeFi moment, it's really a few things. One is we have cheap, abundant block space. You have blockchains like Solana that are high throughput and matured to offer, a lot of reliable, cheap transactions. You have L2s that are offering cheaper block space, and you have, more blockchains that are verticalizing their block space to also provide, cheaper transactions. The second part is the developer experience has gotten miles better over the past 18 to 24 months. You have, platforms like Privy and Turnkey that make it really easy for developers to add embedded wallets. They don't have to build out, wallets themselves. And then I would say the final kind of thing that we're seeing is just like an improvement on the UX form factor. And so it's been pretty wild that we haven't seen a ton of mobile iOS native crypto applications. This cycle, we saw Moonshot kind of come to the front as like one of the leading new kind of consumer DeFi applications. As crypto moves to like have this mobile moment, it will further enable these types of like DeFi consumer applications. And then I think we're also just at a more mature part of the consumer DeFi stack where there's more assets on chain. There's more ways to get yield in a sustainable way, and all of these DeFi primitives start to stack up to enable people to build applications that more consumers want.
Okay, really like your take on consumer DeFi because I think that people don't quite yet see what is coming on these like consumer apps that are going to allow you to use DeFi. Because like DeFi is still this like super small niche market, right? Like how many people are actively using DeFi? I don't know if you have a guess, but like hundreds of thousands, maybe
number.
Like maybe millions on a regular basis, maybe. Like it's not I don't think it's in the tens or the hundreds of millions, like not even close.
No, for sure not. I think, the only thing in the tens of hundreds of millions is probably people, from like an exchange perspective, but from a, borrowing or leveraging like yield protocols, like that is definitely a smaller number today. And in part just because it's like really hard to do that. Like most consumers don't want to figure out how to like manage those types of positions, or, there's a lot of, concerns when it comes to, even like how to do that from a UX standpoint.
So when you talk about uh, the growth of crypto apps that are meant for mobile, they're meant for consumers. They're not these like clunky, difficult to use apps that we have right now, where where you have to you basically have to be like a crypto scientist or a crypto tech wizard in order to use them. Are these apps here? You mentioned Moonshot. Are these apps here now, or do you think that there's more apps coming that we just don't even know about yet?
I think there's definitely a lot of apps and innovation that we're seeing in the private markets that are going to be coming to market over the next 6 to 12 months. I think there are some apps that are offering, similar service today, or at least like combining different distribution mechanisms. So like, we see people trying to offer, ease of use in a Telegram, native way. How do you combine like where these users already are? I think the first use case that we've kind of seen the most adoption here isn't just in payments, in particular in emerging markets. That's by far been like the types of consumer apps that are doing the best. And these are like a dollar app or a Bello, or, there's a variety of others that are moving real volume. That's kind of, I think, the first use case that we start with. And then, then you can start to layer on these additional DeFi primitives on top of that.
Mm-hmm, mm-hmm. And when we look at this, so our audience is retail investors, and the big question, I think everybody's excited about DeFi. Everybody believes in the fundamentals. You look at the fundamentals, you're like, holy shit, like these protocols are making real revenue, like legitimate revenue, right? Unlike Pumped Up Fund, which was making real revenue and then all of a sudden making no revenue, right? Like we're not seeing these are more consistent building. So, but the question on everyone's mind right now, and I don't know if you have the answer, but I would love to pick your brain or have a conversation about it quickly, is where is the opportunity? Is it on picking a chain? So is it like, okay, I'm going to stick with ETH and I'm going to go with like Lido and Maker and Aave and Athena and Uniswap, and I'm going to make like that my ecosystem? Or I'm going to go with Solana, I'm going to go with Jupiter and Jito and Camino and Radium, or I'm going to go with Base, I'm going to go with Aerodrome. Like, how does an investor differentiate between all of these different DeFi apps? Is it just the chain that's the difference, or is there other differences that you think about?
I think there's a variety of differences. I mean, I would go so far as to say is like, if you're a consumer and you're trying to use DeFi, like you don't really care about the chain itself. You care about the product that you're getting. And so, the reason that a lot of trading moved over to Solana over the past, 24 months is because it was a better chain experience for that. I think that as we have more things to do on chain, users will flock to whatever chain is going to offer that. In particular, I think it'll be up to the application to provide an opinionated experience. And so, you as the user will just be able to go to the app and you'll be like, hey, I want to borrow against my Bitcoin. You don't really care what chain that's on, how that gets done. Maybe it's going to go through Coinbase and Morpho. Maybe it's going to go through, some Bitcoin L2, DeFi lending app. But the idea is, I think that it's going to be up to the developer and the application to be opinionated about what that user experience should be.
Right. So it's really about paying attention to which apps are providing this user experience. Doesn't really matter what the chain is. It's the user experience, kind of like how Phantom came along and just created a better UX for wallets, right? And we all wanted that. And Phantom has really done incredibly well over the past year. And so when you think about investing in these various DeFi protocols, you're not necessarily thinking like, hey, I'm an ETH maxi or I'm a Solana maxi because you think the chain gets abstracted. You're thinking, okay, which one of these protocols is just going to provide the best UX and the best experience?
Yeah, absolutely. I think that is all that matters. And that's why you see, Moonshot did incredibly well, this year, and it aggregates both Solana and Ethereum. And I think that will become more default for, applications, because like if you're an application and you're providing yield to your users, like you want to provide the safest, best yield. That yield might be on Solana, but maybe, the greatest liquidity for borrowing against your Bitcoin is on Base. And so you're going to have to cobble together use cases and DeFi protocols from different chains.
Mm-hmm. Okay. Let's look at RWAs because we had Dan Tapiero on the show recently, and he just launched his new fund, 50T, predicting that crypto total market cap is going to go to 50 trillion in the next 10 years. Raul Paul has said that crypto is going to go to 100 trillion. So we got some big estimates here. And I trust these guys. Like, these are two very well respected. They're not just throwing out numbers for the sake of it. I mean, Raul might be a bit of a sensationalist, but he's got a lot of experience and he knows what he's doing. So the question is like, how the heck are we going to go from 3 trillion to 50 trillion or even 100 trillion? We're going to need a lot of new capital. We can't just do that. Like, we're not going to get there by speculating on Bitcoin. I mean, maybe like a long time from now, but Bitcoin's not all of a sudden going to a $50 trillion market cap. I would love it, but it's not the case. So we need new capital coming into the space. How is that going to happen?
Yeah, let's talk about where we are today and where we've been historically. So if you think of crypto today, it's mostly been this circular capital that has grown as we've, built new primitives. And so, Bitcoin was the first, and then we had Ethereum, and then enabled to set up DeFi applications. Then we got DEXs, we got lending protocols. That has all enabled the, on-chain economy. But the next leg of growth is probably going to come from real world assets coming on chain. Even if you look at Ethereum today, it's probably like 15 to 25% of Ethereum's TVL is real world assets. And so that
15
number,
to 25% of Ethereum's
yeah, I mean, if you do,
TVL.
if you do like rough numbers from
the data,
would
you include stable coins in that?
That's excluding stable coins. Stable coins would be then even much, if you included stablecoins, much more of Ethereum's TVL would be real world assets.
I'm glad you're excluding stablecoins. So we're seeing, and to most, like, that number blows my mind. Like, to most of us, we don't pay attention to RWAs, right? So, totally. And I'll bet you that's growing lightning fast.
Yeah, and if you go to rwa.xyz, you can kind of see some of the data. It's mostly UST bills from players like BlackRock and Ondo. It's credit from people like players like Figure, and it's, to your point, like a less sexy investment vehicle, especially to your typical like crypto investor, and so it gets much less attention. But I think we're at the point where now that you've issued kind of UST bills as kind of this like fundamental asset on chain, that really just opens the overton window to bring more assets on chain. And so over, the next decade, I very much agree that the, amount of assets on chain is going to grow significantly. And the question is like, what comes next? And I think that there's probably a few things. One is tokenized US stocks. I think this is probably the most near term. There's players like Ondo, Denari backed that are all enabling for US stocks to come on chain. I think we're going to see greater access to people outside of the US. And if you think about it from like a crypto investor's perspective, like do you really want to bridge your assets like back to your bank account and then to Robinhood? Like, no, you'd rather just have one application where you can have like your entire portfolio of stocks. And then the last part of like why stocks on chain is interesting is because you can just increase the liquidity profile. I think NASDAQ announced today that they're going to go 24/5. So they're going to do it 24 hours, 5 days a week, which is still just like significantly
Really,
less.
NASDAQ announced that today.
I'm pretty sure I saw that in the news. But it's like, even if you think about and that's awesome that they're going to do that. Like that's like a massive like step function increase, but it's still nothing compared to crypto, which is 24/7, 365. And so if you can build that liquidity on chain, then that just opens, the doors for, bringing those entire financial markets on chain. Mm-hmm. The other two, I think, potential interesting assets that are maybe more near term are probably commodities and credit. We see a lot of new types of like credit applications being built on existing players like, Morpho. And then additionally, like commodities is just like another relatively like homogenous asset similar to US Treasuries, where like it's not as like complicated as some other assets to potentially bring on chain.
Mm-hmm. Yeah, the interesting thing is, so stocks on chain, everybody listening can wrap their head around, I think. But I'm guessing that most of our listeners do not invest in commodities or credit. Definitely not credit, maybe commodities, right? But why is commodities and credit coming on chain such a big deal? Because professional and institutional investors invest a lot in that stuff, a lot. And there is obviously a lot of as you said it yourself, BlackRock, right? BlackRock gets it. Right. And if BlackRock gets it, then, and even Fidelity gets it, Franklin Templeton gets it. Like, and even the fact that they get it, they're still what they're doing. They're just still dipping their toes. Can you predict, or do you have any predictions of like how quickly this will happen, the scale of the growth that could happen here with RWAs flowing on chain?
I mean, I think the answer is probably going to take longer than we would all wish.
No, come on, Mason. I don't want that answer.
But I think it's something that happens, slowly and then all at once, because a lot of these institutional players, they in part are looking for more regulatory clarity. And so I think like as we get more regulatory clarity in the market, that expedites the process in which they can bring these assets on chain. And then it's also just a need for the continued maturation of DeFi, which is happening. But, that is like a prerequisite to, bringing some more assets on chain. And then the last thing is just like the liquidity profile. The UST bills are a little easier to bring on chain because it's like a very homogenous asset. It's something that people understand. There's also this massive like pent up demand for yield bearing stable coins, which further spurs that type of adoption. I think figuring out, what is the correct vehicle and use case offering is going to be important. But I'm positive it's going to happen. It's just a matter of when.
Mm-hmm. Yeah. Well, we did an episode with Jake Travinsky earlier this week on Monday, and he had a similar sentiment to you in the timing here, which was that stablecoin legislation we could see sooner. He believes that could happen this year, next year. The market structure legislation, he was like, that's probably more like 2+ years out, which I didn't necessarily want to hear that, but Congress and government move slow, and we need legislation, and then we need regulation from the regulators, and this stuff does definitely take time. But I just want to come back to stocks on chain. Do you think stocks on chain happen soon? Like, do you think that happens this year in a significant,
yes.
meaningful way?
I mean, I think it depends on how you define significant or meaningful. But I do think the way most of these will start is you'll get a subset of US stocks that you can trade on chain. I think it, again, in part depends on what is the demand from consumers, like how much do people actually want this product. I have a sense that it's going to be, a well-desired product, in particular when you can start to combine it with existing crypto applications. And so, yeah, I'm very optimistic that we'll see more demand for US stocks on chain over the rest of this year.
Very exciting. I mean, I think just even being able to buy coin on chain would be so exciting, because so many crypto natives are probably investing in coin through the stock market. And so if I could now get them on chain, and that feels like it's coming soon.
I don't mean to front run, but I think it might have happened. I think it might have been announced today too. on
Today.
Twitter. At least I think I'm pretty sure I was seeing this
No
um,
way.
very, very briefly on base. But I think this coin is like a perfect example of a, you know, it's going to be like an interesting example of a stock that is showcases the demand for what people want. And yeah, so backed, I think, tokenized Coinbase stock on their chain on base chain
On
today.
base
So now,
today.
yeah, you can officially buy it.
Man,
And so
it's
yeah,
like
that'll be a really interesting proxy for how much demand there is for this tokenized stock asset.
it's this the crypto summit today is just creating a wealth of news and announcements for us. Everybody is hyped up. Okay.
TGIF.
TGIF. Never thrown that one out in the show. I gotta use that more. That takes me back to the 90s. Okay, let's let's chat a little bit about let's take a step back for a second. So uh fintech was a massive uh accelerant for financial markets. And what we all want to see is we all want to see crypto in all financial assets and all financial markets, and we all believe it's going to happen because it's just that much better, as we talked about at the beginning. Now, what Stripe really did, and I really like using Stripe as an example, and you've used them as an example as well, is Stripe really allowed like they made online payments dead simple, and then they allowed developers to very easily make apps or make websites that made online payments very simple, right? And so it led to this explosion of e-commerce, right? Um, that is starting to happen within DeFi with the platform, or you would call DeFi's platform moment. Explain that to us.
Yeah, so just in the same way that Stripe's initial product made it really easy for any online merchant to accept payments, it wasn't until they launched Stripe Connect, which allowed for this platform moment of Stripe, where they could have like multiple payments, process payments from like multiple services. And I think we're seeing something happen in DeFi that is very similar. Where if you take Uniswap as an example, like it started as this like standalone application that allowed anyone to LP or trade from a pool, and that's a great service, but it's also like hard to build on top of that. And so what we've seen now is this transition from Uniswap in Uniswap v4 to this platform moment, where rather than build this like standalone application, they now have this singleton liquidity protocol that has all the liquidity, and they allow anyone to build a DEX on top of Uniswap. And like, why is that valuable? It's because now you can build more applications on top of Uniswap as kind of this like fundamental primitive layer. And so that leads to difference in like Uniswap hooks that can like build dexes that are more specific or targeted. We start to see a lot of innovation around the types of like custom logic and use cases that you can build. And this isn't something that's only happening in Uniswap. We're seeing this happen in the broader DeFi ecosystem as well. Fluid, formerly known as Instadap, has built a similar shared liquidity primitive layer that its lending and DEX are built on top of. We've seen Morpho adopt a similar strategy that has enabled more applications to really plug into the Morpho protocol. And so what I think this really enables, like, why does this matter, is because you get to this moment where DeFi has matured such that it can now support like large applications on these massive platforms. And so I think that broadly expands like both the ways in which the existing platforms can grow, but also brings a lot of new opportunities to the market.
Mm-hmm. Yeah, this modular architecture, this stack that is being created, and as you said, where you have Uniswap or Morpho or Fluid as the platform layer that provides this liquidity, and then anybody can come in and easily build an app on top that is more niche, more focused on a particular use case. Like that's the level that we're at, and you kind of need to be at in order to really bring the masses on chain, because we need a lot more apps that offer things that people actually want and solve real problems, when like we kind of haven't really had that yet, right? We haven't really had that moment yet. When you think about time here, what do you how quickly do you see these platforms accelerating and these apps coming out on top of these platforms, and any particular ideas or things that you think that you have in mind, or maybe some alpha you can give us from deals you've got going on. I don't know how much you can share of what might be coming in the future.
Yeah, I mean, I would say this. I think that we're already starting to see a ton of applications being built on top of these protocols, and that comes in a combination of ways. Like one is like the kind of like consumer DeFi moment that I'm talking about is also, enabled by this platform moment where like now a consumer application can like build its own DEX on top of Uniswap, plug into Morpho's like lending protocol more effectively. And so I think that's like one subset of opportunities we're seeing. I think the other is just like a we're kind of at this like new place where we can start to see more DeFi innovation. And I think one place in particular we start to see that is with hooks on top of Uniswap. You can just think of a hook as like an app built on top of UniV4. And there's a variety of hooks that are building in the market. UniV4 launched over the past, I think, like month or so. And so it's still early, but we're already starting to see a lot of applications building there. And so, yeah, that's definitely something that I'm watching closely and very excited about.
So there could be an acceleration coming then, because these platforms are, I mean, as you said, UniV4 just launched, right? Like these platforms are still relatively new. Morpho hasn't been around that long either. So they should be accelerating these apps as they come out. When we step back for a second, so we've talked about consumer DeFi, we've talked about RWA, we've talked about these platforms. Not financial advice, everybody listening, but if you were an investor, where do you think there's an edge and an opportunity? Are you looking at the Ondos on the RWA side? Are you looking at the platforms, Morpho, Uniswap? Are you trying to look more for the consumer apps? I mean, obviously you can't invest in Moonshot. I don't think they have a token, but where do you think the opportunity is in this cycle?
Yeah, I mean, this is probably the answer that you want to hear. And obviously, this is not financial advice, but I think there's opportunity in a lot of places. I think from the liquids perspective, yeah, there's this idea of compounders continuing to compound. I think that, we see players like Uniswap who are trying to verticalize and figure out more ways that they can both like capture more value, but also like provide their platform with greater edge. And so something like Unichain is like a perfect example of that, where UniV4, on Unichain, you could imagine that as Unichain offers stuff like MEV rebates, or as their sequencer network goes live, there's a lot of potential synergies that you could imagine happening. And then from the private side of the markets, I think that there's a ton of innovation. We're seeing both at like the primitive layers of people building on top of these platforms, people building like new primitives, and then also just from the consumer application standpoint, like Moonshot did a really good job. I think that there's a large opportunity for, similar but different types of consumer applications, whether that's offering for, stocks, whether that's offering for yield, or, combining a lot of those to provide the best in class experience.
Yeah, it just shows you how early we are. Like time is such a funny thing. It feels like it's been a lifetime in crypto. And even like a month can feel like a lifetime. And we're still so early. There's so much exciting things happening and so much coming. When you guys at Pantera, when you look at investments and your thesis, is DeFi your focus? What's your investment thesis, short term, long term?
So at Pantera, we're focused on investing across the range of applications and infrastructure built on, built on blockchain. I think DeFi continues to be a focal point of the crypto ecosystem, but we're also seeing a ton of adoption in other use cases that are just earlier. I think given where we are, with the greater financial markets, like finally coming to a greater adoption of DeFi, it gets really interesting. You have players like Ondo, which we've invested in, that are really pushing the needle to bring like more RWAs on chain. I think that like that trend continues and opens up like a lot of a subset of like opportunities. So, I mean, yeah, we continue to be really excited about DeFi, but as well as just like the broader ecosystem at large.
Mm-hmm. Do you think you've talked about the fat app thesis. Where do you think value accrues in the long run here? Does value accrue to the protocols, or does it accrue to the apps? Does it accrue to both?
Yeah, this is always like a fun debate because Joe Monegro, who initially authored the Fat Protocol thesis, I think largely if you were investing across that thesis over the past like decade, directionally, like you probably did very well. I think we're now at the point in time where block space is commoditizing, and every sufficiently large application will launch its own chain. And there's really like a few reasons that you'd want to do that. The first is because like you get greater control over your block space. That means you can like customize things, like what Unichain is doing with like their flash blocks, which is really cool. And just, adding like faster block times. You can capture your own sequencer revenue, which can be like incredibly profitable, as evident from players like Coinbase. And then the final thing, it just comes back down to like, the value accrue of like L1s that we see today. Like, crypto assets are playing for this very like long tail market opportunity of, building these like non-sovereign blockchain networks. And that opportunity continues to be the largest opportunity that exists. And so that's kind of like the third and final reason that you see a lot of applications start to, build their own block space.
Mm-hmm. Mm-hmm. Yeah, it's going to be very interesting to see how it plays out. It feels to me like, as you said, the L1 trade, the protocol trade over the past decade has done really well. Feels like it still could do well in this cycle, but as you said, it's becoming commoditized, and we got too much block space right now. We don't need it all.
Yeah.
So I don't know how long that trade can go for anymore.
I think it just evolves. So like, I do think that the time to build a general purpose blockchain is probably over, and that go-to-market strategy is going to be fairly difficult for chains today, versus if you take a more specialized approach that has, I think, greater opportunities. And the most specialized approach that you can take is by building an application that bootstraps your own blockchain. I think that will be the most effective.
A great example of that recently.
Yeah, Hyperliquid's a great example of that. I think that that has obviously like done a very good job at like bootstrapping their initial chain. And I expect like us to see more, at least L1 and L2 blockchains in the future take a more specialized approach rather than a generalized approach. And I mean, for like maybe some context on like what's an example of some type of L1 that maybe makes sense today. Like one example, and this is related to RWAs, is bringing FX on chain. Right now, most FX is in stablecoins, in particular USD peg stablecoins. It's like 99%.
99%.
But as we get, it's the vast majority. But as we get more localized stablecoins, whether it's like Brazilian real, Mexican pesos, and develop deep liquidity on chain, that opens up this unique opportunity to do FX on chain. And FX in the traditional markets, like you're fighting for basis points, like individual basis points. And so having a optimized chain for that makes sense. There's potentially features around permissioning in terms of like what actors can and can't do on that type of chain. And so I think we're going to see more types of L1s, L2s enter the market that take these like specialized approaches.
Mm-hmm. Yeah, that makes a ton of sense. Mason, this has been a fantastic conversation. Thank you so much for joining us today.
Thank you for having me. This has been a blast.
Really appreciate it. We'll have to get you back on the show again soon. Everybody, thanks for listening in. Hope you enjoy the news of the day from the Crypto Summit. It's going to be a good news day, everybody. Even though markets maybe aren't doing what you want them to do, don't worry. Macro will turn around. We're still bullish, still feeling good here at the show. Thanks for listening, everybody. Have a wicked awesome day. TGIF. As always, if you liked today's episode, please hit subscribe and make sure you follow us so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, we're going to also leave a link for Milk Road Pro. You get access to our portfolio where you can see exactly what we are buying. This is your #1 resource to help you invest successfully in crypto. One final note, this show is for educational purposes only, and nothing we say is financial advice. Investing in crypto or any asset is risky, and you should never invest more than you can afford to lose. Thanks so much for listening in, my friends. Have a wicked awesome day.